India's stock market for a fairly long time uh, has resembled a casino. Some might even say that it is the casino capital of the world. That is because 98%, more than 98%, perhaps 99% of all our stock market trades happen in the futures and options segment. Purely speculative, notional trade, uh, no cash, no physical shares.
What mattered is everything came together. You were giving them a tax advantage. STT
Yeah,
is less on them. All right. You are giving them an advantage of intraday buy and sell,
yeah,
which you are not giving to mutual funds, which you are not giving to PMS, which you are not giving to anybody except individuals, right? But here foreigners can come and do an intraday buy and sell. So you've allowed an elephant and you're a bunch of little ants over here, which is the retail investors.
that 90% of individual traders lost money in the options and futures and options segment.
Yeah.
But how do these speculative 99% of the transactions, how do they add to nations' social or economic production?
Zero. It's negative. It's net negative.
Hello and welcome to this special discussion on the governance of India's stock market. You might wonder why we are discussing the stock market in this program. Now, there's a reason why we're doing this, because India's stock market for a fairly long time uh, has resembled a casino, if you will. Now, you might ask me why it resembles a casino. It and this tendency has particularly accentuated in the last 4 5 years post pandemic. When I say the Indian stock market increasingly resembles a casino, in fact, some might even say that it is the casino capital of the world. That is because 98%, more than 98%, perhaps 99% of all our stock market trades happen in the futures and options segment. Purely speculative, notional trade, uh, no cash, no physical shares, and barely 1.5% of the daily stock market volumes are conducted in actual physical in the cash section. Now, why is this peculiar to India? Because this happens only in India. Nowhere in the world, much bigger economies like the US, Japan, even China, Europe, uh, do speculative volumes or the futures and options segment. Do they generate 99% of the daily trade volumes? And why does this happen only in India? We will discuss this peculiarity today. And I would also add that this is a dubious distinction, which we need to understand, and we need to sort of unravel the anatomy of this whole stock market governance system, which enables 99% of daily trades in the purely speculative section of futures and options. For this, we have invited a special guest who's a financial expert, who's been a fund manager. He's an author. He's been writing regularly over the last decades, and he's a columnist with Business Standard, and a critical, more than anything else, he's a very critical examiner, observer of India's market governance system. So, so I welcome Debashis Basu to our show. Welcome, Debashish.
Very happy to be here.
Thanks for talking to us. In fact, as we speak, this whole discussion is based on your column in Business Standard earlier this week, which is titled "The Real Issues in the Futures and Options Segment of the Market," where you systematically bring out the deep flaws in our stock market governance system. And if one were to make a harsh judgment, we could even call it an officially mandated scandal, the way it operates. So can you please explain to us in simple terms what prompted you to write this piece and give all the data that you've given as a framing? This is a framing question. Please give us an idea of what exactly are you trying to say.
Okay. Thanks for having me, Venu, and very happy to share what I think. I've written, as you said, but that's about 840 words or so, and there's a lot more on that topic. So I jump straight onto the core issues, and that's what I like to do instead of beating about the bush.
Yeah.
So I feel there is a lot of discussion, debate. Policymakers will come up with papers, academics will write papers on it, and there'll be, sort of what should be the architecture, what has gone wrong, etc. So cut out all that crap, I thought, and I said that is there an incentive inside in the market to change any of this? So that would really mean giving up a lot of money. The government that makes a lot of money, a tiny bit over millions of transactions called securities transaction tax, and then fees, and then GST on all of that. The biggest gainer, of course, is National Stock Exchange, which makes fees for every turnover that happens over there. The more, the merrier, and including turnover fees and other fees charged by SEBI, right?
Yeah.
So these are the three, I would say, entities that can make a change if there is a problem inside the market structure. Let's just assume that the market is functioning wonderfully. It's the best market in the world. If any change has to be needed, it involves these three entities, right?
Yeah. You mean the government, SEBI, and the NSE, right?
NSE, yeah. So essentially, NSE is called NSE, or the exchanges are called the first line of regulators. That's a term that they use in market governance. So they are the ones who are monitoring every day. They have really high-tech equipment. They have thousands of crores invested in that. They have thousands of people who are monitoring. They have a lot of fancy software. So they are the one at the front line. They're seeing what's going wrong. They're supposed to know every day what's going wrong. They can do it if they want to. Now, if they find something wrong, they can on their own. They have a lot of powers to discipline market participants, because this is a very regulated business. You cannot just go and start trading, for instance. You have to register as an investor with a broker. The broker is regulated by the exchanges. So something goes wrong. So there is a broker and there are millions of investors. Exchange doesn't have to come to these millions of people saying what you're doing wrong. They can just switch off the broker's terminals, saying that, hey, first warning, second warning, whatever the process is. But within seconds, the broker's terminals can be switched off, saying that you have not adhered to these norms, you're increasing market risk, etc. So unless you do X, Y, Z, you are out of the market.
Yeah.
So it's a phenomenal power that they have, fully automated and very easy to do. All right, because it's all technology driven. You don't have to physically go and shut down, and not like the inspectors, the municipal commission inspectors, etc.
Yeah.
Now that's one. Something is persistently wrong. They are supposed to bring it to the notice of the regulator, because now we are not able to do it, because there are certain rules which are set by SEBI, which so they can make a representation to SEBI in the public interest, right? Saying that, listen, these are the things that we need to do. SEBI can look at it, and SEBI again has to balance public interest with private interest, etc. They keep saying that our preamble says that we have to, protect investor interest, we have to develop the market and all of that. And if it's logical, reasonable, if it increases without undermining the nature of the market, the free-flowing nature of the market that we need, they can easily do that. If that also doesn't work, Ministry of Finance has representatives in the SEBI board. They discuss all of these things, right? And if that doesn't happen, or if SEBI is not making these changes, the ministry representatives can talk to the Ministry of Finance. And there is a joint secretary capital markets who
Yeah.
is nameless, faceless, but under a certain finance minister, a joint secretary of capital markets, was de facto SEBI chief. He was more powerful than the SEBI
Yeah.
chief, right?
Yeah.
So, in any case, all of them, as I pointed out, are also interested parties
Yeah.
in financially. There's a huge conflict of interest fundamentally.
Yeah.
So when it comes to the private sector or private individuals, we are very very quick to say, oh, there's a conflict of interest here, and you should excuse yourself, and you're not the right person to govern or talk about it, and all of that. When it comes to the government, we don't apply any of those standards, right?
Yeah.
And we know that even where no financial involvement is there, where it is simply a policy, let's say, some scheme or something like that, which is in public interest or socio-economic scheme or whatever, you know, even there we can see very clearly there are leakages, there is corruption, there is lack of accountability, and so on and so forth. And here, the last year, the government made 55,000 crore in STT from
Yeah.
the stock exchanges, right? From the stock market trading.
Yeah.
10 years ago, it was 6,400 crore. It's
Yeah.
a 25,
Virtually 8 times increase, right?
it's a 25% compounded annual growth rate.
Yeah.
25% compounded annual growth rate. No business in India grows at 25% annual compounded growth rate. Nobody's portfolio grows at 25% compounded annual growth rate. An average person's, unless you're a superstar trader or whatever. But the government is extracting 25% CAGR from the market. Next year,
And
they
one small interjection here, Debashis. We are discussing the futures and options segment, which constitutes 99% of trade. So
I'll come to that.
I assume most of this money comes from the FNO futures and
Yeah,
options
yeah.
segment,
Where the
speculative trade segment, right?
yeah, but the STT percentage is a little less on FNO. So 90% trading, 95% trading does not mean 95% of the STT. It makes a
Yeah.
lower percentage, but still it's very substantial. It's 45-50% or so.
50,
All right.
50%. Okay.
Yeah. Now, these are estimates because the government doesn't break it down, the
Yeah.
STT, from cash trades and FNO trades. It's just certain estimates people have made.
Yeah.
Now, there is a clear conflict of interest. Will
Yeah.
you do anything to reduce volumes, to reduce turnover, and at the same time, where you will have to forego a substantial chunk of your revenues? Revenues is what everybody wants. The government is starved of revenues. It doesn't want to give up any revenues. GST is
Sure.
exceptionally high in India as a
Yeah.
value-added tax.
Yeah.
The trading cost in India is exceptionally high as a cost of trading. In fact, SEBI study states in one interesting study of 21-22, they studied all the traders who made money and lost money. The people who lost money paid an additional 28% over and above the losses
Yeah.
for transaction cost. The people who made money, the small number of 10% who made money, paid 50% of their profits as transaction costs.
Okay. Okay.
All right. So here
Okay.
is this silent partner that you have behind you, whether you make money or no money, it's taking that. Now, this
But
has been
Debashis, I want to add one to give context to what you're saying.
right.
There's a SEBI report which you mentioned in your article that 90% of individual traders lost money in
Yeah,
the options and futures and options segment,
yeah, right.
and small traders. Does it stand to? I mean, is it correct to argue that small traders have lost money, and the big players are gaming the system? Because that was the context in which you wrote that piece. Because an American trading firm called Jane Street had put trades across all these segments: futures, options, cash, and they've done arbitrage, and they earned huge amounts of money. And SEBI came down hard on them, impounded 4,800 crores of Jane Street's money, and accused them of hurting the small uh, uh, investors and traders. Now, the small traders and investors are getting hurt in any case. Even before Jane entered, they were losing money as per SEBI's report, which you have quoted, that 90% of the traders lose money. Now, what do you say about a market in which 90% of the small traders are losing money, and the only people who are making money are government via taxes, SEBI via its fees, and NSE via its also via its fees. And you describe this phenomenon very nicely, and you call them rent collectors of the stock market system. Now, is it as blatant as that?
Now, as a practitioner, I would try to distinguish between the different strands of this.
Okay.
There's no systematic until Jane Street's scam has been exposed by SEBI.
Yeah.
Nobody knew how the two are connected, which is big guys making money and small guys losing money.
Okay.
Right. See, this 90% people losing money is not something I would lose sleep over.
Okay.
By itself. Okay.
Because it was their choice, you're saying. Yeah.
Yes. Number one. Number two, it's like a lottery. In fact, if you have a system where 10% of people were winning lotteries, that lottery company will not survive beyond a certain point. Okay. See, the number of people who are winning lotteries are minuscule percentage. All right.
That's why I call it a casino, because even in a casino, most people lose money, and the rule maker actually takes away all the much of the takings.
Right. So that part is correct. That part will continue even if you did not have options in futures. When we advise people, we look at portfolios. We had an investment advisor license under which we used to advise people for their own portfolios. So when they shared their existing portfolios with us, after which we do restructuring, there would be lots of stocks, large number of stocks, maybe 50, 60, 70 stocks. Many of them bought at the previous market peak, and they kept on holding. So even if there was no FNO market, even then I don't think people would be making money in the stock market in large numbers. It's a different type of a game. It's meant for either professionals or semi-professionals, at least people who educate themselves, who continue to learn, who have a passion for it. It's not simple. It's not easy. It's like saying that tomorrow I'd start playing some game, some badminton or tennis or whatever, and I should be winning almost all of the time, almost 50% of the time. It depends on what type of game you're playing, what you're investing, how much you're investing in it, and what levels are you playing at. I mean, this is not easy. Let's say if it's so easy to make money in the market, everybody would be doing it, right? So,
but what about Debashis, but the term you use, rent collectors of the stock market system. For them, the revenues are stable, right?
So I am coming to that third. The second part is what SEBI found in case of Jane Street. Just because 90% of people lose money does not mean you and I have a right to cheat them, right?
Yeah.
Okay. That's what Jane Street has actually done, and that's what SEBI has pointed out.
Okay.
But that's the two different things.
Yeah.
Don't conflate the two. 90% of the people losing money because Jane Street, like people are allowed a free rein. No, that's not correct. With or without Jane Street, 90% would have still lost money. There's no question about that, because they don't have a technique, they don't have stop loss, they don't educate themselves enough. They're big risk takers. They're all of that, right?
So in a way, you're saying they're destined to lose, given the way they come into the market without any knowledge or expertise, right?
100%. 100%. But as I said, part two, that doesn't mean big guys have a right to pick on them and make money off them in an illegal way. Now, unfortunately, the fact is that the Indian market architecture, what we have over the last 20 years or so, when index futures were launched, I think in 2001 by National Stock Exchange. As a hedging instrument. All right. Then a few years later, stock futures were launched, stock options were launched. In 2008 was a watershed period. This is the time when high frequency traded were allowed into the Indian market. We have argued in our book, Absolute Power. It was introduced illegally because NSE at that time had incredibly powerful management with a strong hold on various branches of decision making.
Yeah.
So, for the first time in India, without any discussion, without a white paper, high frequency trading was allowed through a simple circular,
Okay.
right? So, high frequency trading is something I have an objection to, because you are allowing certain people access to NSE servers inside. So there are NSE servers, and the other your servers that you're a big player are alongside.
You
This
mean
is
there's
called
clear asymmetry of information? Yeah.
yeah. It's called co-location.
Yeah.
You are right there. You have access, faster access, and we know that. Our, in that book, we explain how in
Yeah.
2015.
You have very actively pursued that case also. Yeah.
Yeah, so we have explained how people got early access. So this was the first scam.
Yeah.
So illegal entry, 2014-15 scam of early access,
Yeah.
2025 scam of Jane Street. And in between, millions of people, Jane Street types, are still operating in the Indian market.
They're operating.
Using
Yeah.
yeah, yeah,
Yeah.
using the same architecture.
Why
So
can't
we
they be
have
controlled, Debashis? Why can't they be regulated?
it's very easy. See, the almost 50-60% of that architecture needs to be demolished tomorrow.
Okay.
One of them, for example, is and Jane Street was trading heavily in Bank Nifty.
Okay.
Bank Nifty is less liquid than Nifty 50.
Okay.
It's an
Okay.
index. Bank Nifty is an index of bank stocks.
Yeah. Bank stock. Yeah.
India has hundreds of banks. I mean, but let's say in the invested space, India has 30 banks. Give an example, including
Yeah.
public sector and all of that. You know how many banks are there in the Nifty Bank Index? Just 12.
Okay.
You know what is the weightage of ICICI Bank and HDFC Bank in Nifty Bank Index? 53%. Two stocks.
Two stock. Okay. That's
So
huge.
these two stocks you need to manipulate. Your index you can manipulate.
Yeah. Yeah.
So at a time in 2001, when the late R.H. Patil had planned for futures and options, he had said that index cannot be manipulated. We should have index futures and index options.
Okay.
25 years later, a foreign entity is manipulating our index at will because we have offered it to them in that way.
Yeah. And as you say, Debashis, we've offered it to everybody. Even the domestic guys are doing it, right? Yeah.
Yeah, but you need enormous capital to move the market in that way. So there is no question of any of us having that kind of capital. You also need the DNA of that kind of an organization. US is full of high frequency hedge funds,
Yeah.
big traders, big risk takers. India does not have that culture. India
Okay.
does not have a George Soros, for instance. I'm just
Yeah.
giving an example. For what
Yeah.
maybe Rakesh Junjunwala was one as an individual. I don't know.
Yeah.
But to have institutional, high frequency, large scale risk taking ability is just hasn't doesn't it does not is not there. We do not have the institutional culture to have created that. We have created a very structured, and those are because of SEBI rules. You have
Yeah.
a mutual fund structure. You have a PMS structure, portfolio management. So you have an AIF structure, which is alternative investment fund structure.
Yeah.
But all of them are very circumscribed. They don't. AIF has a lot of freedom, much more freedom than mutual fund, but you have given 20 times more freedom to FIIs. You are
So
charging them
broadly,
less.
yeah. The bigger point you're making is this whole system is it is weighted against the Indian players as opposed to the foreign players. Is that what you're saying?
It is weighted against orderly market. It is weighted in favor of manipulation, and then it is in favor of foreign players. So you need all of these conditions. If it was not possible to manipulate, giving little bit of tax advantage to foreigners wouldn't matter, right?
Yeah.
What mattered is everything came together. You are giving them a tax advantage. STT
Yeah.
is less on them. All right. You are giving them an advantage of intraday buy and sell,
Yeah.
which you are not giving to mutual funds, which you are not giving to PMS, which you are not giving to anybody except individuals, right?
Okay.
But here foreigners can come and do an intraday buy and sell. So you've allowed an elephant, and you have a bunch of little ants over here, which is a retail investors.
Yeah.
Mutual fund may be an elephant, but it is not allowed to enter into this intraday. I mean, they will not do it. Their mandate is different. They are not supposed to
Yeah.
trade intraday like a hedge fund,
Yeah.
like a
Yeah.
retail speculative investor. So you have this is what they call a perfect storm. You have created a perfect storm by this peculiar architecture, which is a patchwork of various things that you've done over the last 20 years.
Yeah.
Now, why should we have weekly options?
Yeah.
Why do we have weekly options at
Yeah.
all?
Yeah.
See, if you talk to any academic, if you talk to any policy maker, they'll tell you a bunch of things which is textbookish, which has got nothing
Yeah.
to do with what's happening in the real life. For instance, they'll tell you options and futures are wonderful for hedging,
Yeah.
right? It's a
Yeah.
hedging instrument.
That's a theoretical proposition. Yeah. Yeah.
That's absolute bullshit. That is total humbug. It's the biggest hypocritical statement on earth. I'll tell you why. Now, to whom are you giving this hedging option? Hedging options are needed by institutions
Yeah.
primarily, to PMS and mutual funds. Mutual fund, equity mutual funds today, you know the size? 33 lakh crore.
Yeah.
That's multiple of Jane Street.
Yeah.
Okay. You want to give them a hedging option, right? Stay with me systematically. I'll tell you how it's all bullshit. If you are buying a lot of mid cap stocks,
Yeah.
you need an option to hedge those mid cap stocks,
Yeah.
which means you need an index which represents the mid cap stocks.
Yeah.
We have right? You can't hedge it against HDFC Bank and Reliance Industries and all of that. These are large cap, these are mega cap stocks, right?
Yeah.
So Bank Nifty is useless for you. Bank Nifty is a sectoral index, only bank
Okay.
stocks. Now you have a bunch of construction companies, small construction companies. You have a bunch of mid cap defense companies, this, that, or the other. You need a matching index.
Yeah.
There is no liquidity in mid cap Nifty. Nobody trades in that. Very little, right? So what are you going to hedge against?
Yeah. So
Bank.
yeah, true. So Dvashish, now let me come
So these
back.
are the flaws of the architecture that we have
Yeah, yeah.
created
Okay. Yeah.
through various patchwork over the last 25 years.
Okay. So Dvashish, this is understood. You now very elaborately described all the flaws that are present in the architecture. Now, I'll let me come to this political economy or whatever social question. Why is it that that India? This is one aspect, as you said, the architecture is flawed. The government, SEBI, NSE, they all need to sort of sit
They're
together and
conflicted.
find a solution. But why is it that only in India, 99% of daily trades are in the futures and options section, speculative, notional, and even New York Stock Exchange or even the Chinese Stock Exchange. I was studying, reading about the Chinese, or in Europe, the big stock exchanges. Why are they able to regulate this sort of lopsidedness in the system where 99% of the trade are speculative and a lot of mostly driven by individuals, and India is a poor country. 80% of Indians, as per data, they barely manage to earn enough income to meet their requirements, day-to-day requirements. How is it that that so many small investors in India have got into this speculative cycle? Can you explain to me? It's very baffling, this whole data. Why is India with such a low per capita income
I
has a lot
cannot.
has yeah, yeah,
Unfortunately, there's a policy issue, and I don't spend too much time in thinking about that, because that is a job for academics or SEBI policy makers in SEBI and Niti Aayog and all of those places to make a comparison with Europe, Japan, and China and so on, and see what they can do about it. But I know what is happening in India, which
yeah,
is that it's you have allowed it again. I'll go back to the architecture. You have
yeah,
created you have created weekly option expiries,
yeah,
which moves very fast, and
yeah,
anything that moves a lot is very volatile. There's a behavioral psychology at play to come and to come and see if something has moved from $20 to $30 in the next 2 hours. So you say,
Yeah.
oh my God, if I could buy 10,000 of this, then I could exit within an hour and make $10,000. So buy it at 20,000 and sell it at 30,000. So you have created this volatility.
Okay.
It is your
So,
regulation.
so you're saying that high frequency thing has created this volatility, right? That's what you're
What I'm
suggesting.
saying, weekly options, number one, has created volatility.
Yeah.
Weekly
Yeah.
options, they
Okay.
expire within a week. All right.
Okay.
They expire they start on Wednesday. I mean, you can trade a little bit, but within those 5 days, forget about Saturday, Sunday. The volatility is huge trading because
Huge.
they expire,
Yeah.
right? They have no life beyond expiry date. So these are
Yeah.
7-day options. 7-day options gives a lie to the fundamental promise of so-called hedging. What
Yeah.
hedging
Yeah.
will you do over 7 days? People hedge
Exactly.
over people hedge over 3 months, 6 months, 9 months, for instance.
What is the experience in other countries, Debashis?
Yeah,
What is it there?
US is what is called long dated options.
Okay.
Long
Okay.
dated options allow you to hedge. They don't have weekly expiries, as far as
Okay.
I know.
So do you think India could also have long dated options rather than this weekly business?
I think India tried, but it didn't work, which basically means that once again, we were not ready. We were force feeding options and futures onto the market. And then we took what is called the path of least resistance. We did more of what worked, even though that is against public interest.
Yeah. Yeah. Mhm. So Debashis, to again to give viewers an idea, the data says that in futures and options segment, the daily trades are of the order of 300 to 400 lakh crores, which is huge. And in the cash section, it is barely 1% of that, or 1.5% of that. And tell me, you mentioned in your article that in 2022, SEBI came up with a report which identified the problem and which said that 90% of the traders, they end up losing money. What happened after that? Did SEBI or anybody else take further action? If they had, then this Jane Street would not have happened, isn't it?
See,
How do you see that? Yeah.
like in all other aspects of Indian thing, if there is a scam, some action is taken, maybe a law is changed, maybe something is tweaked here and there. But if you don't attack the core problems
Yeah.
of this, then I said they created a perfect storm. They allowed intraday for foreigners. They allowed a bank an index like Bank Nifty, which could be manipulated. They have given them tax breaks for to the foreigners to trade in futures and options. They have created all of these things knowingly, unknowingly, I don't know, but these things were known to the market participants. It was very obvious. Even
Okay.
today, I mean, my point is that why would you allow an index? Why would you allow derivatives out of an index which
Yeah.
which in which 53% weight is two stocks?
Yeah.
Which country will allow this? This is a
Okay.
recipe for manipulation. You're
Okay.
not changing that.
Okay.
You're
Okay.
not you're not changing. You're not stopping FPIs, foreign portfolio investors, from doing intraday. You are asking me not to do intraday. I'm an
Okay. Yeah.
Indian.
Mm-hmm.
You're allowing them. You're not allowing me. You
Okay.
have tax breaks for them. You don't have tax breaks for me.
Yeah. Yeah.
I mean,
So
why?
can
This is
yes.
as I said, all of this started about 30, 40 years ago from Wall Street, financialization of an economy.
Yeah.
More and more, this is supposed to be great. This is supposed to be good. More financial participants, more people are do MBA finance than any other kind of education. All
Yeah.
this is supposed to be good. At some stage, if India is serious, and India is not serious about anything, whether
Yeah.
it's a water falling inside in a airport terminal or a bridge collapsing, we are not serious about anything. So we are not serious about this also. If we were serious here, this is a very easy fix. Everybody, not me. I mean, write another article next week saying what is to be done. But I can
Yeah.
guarantee you, Venu, not even 90% of that will not be done. And it not me, there are others have written or saying, don't
Yeah.
do any of these things. But they have to do it, right? and they can't do it because they can't give up the golden goose, which is where I straight went into in my article. Instead of going through all of these discussions, academic discussions of what should be done and not should be done, they don't want to do it. This is the reason.
To me, I mean, to me, it's astounding, Debashis, that to me it's astounding that that SEBI itself makes some 1,600 crores, as you mentioned in your piece, as fees, which comes from, as you said, this highly imperfect system, where a large number of small traders are losing, and the regulator is actually gaining in terms of fees, and the government is gaining in terms of taxes, and as you said, NSE is gaining in terms of its profits.
And how? 78% operating margin. No business in the world has 78% operating margin. SEBI is not asking them to reduce the fees. They can easily do that.
How come there is competition to NSE, right? Are they a monopoly? I mean,
that is, I mean, if you read our book Absolute Power, you realize how they managed to get into this monopolistic position by a variety of legal and illegal means. So it has been so for a while, and BSE also has not made its situation better. But now BSE has come back a little bit. They are also in options, but ultimately neither is in public interest. I mean, to have BSE also, if NSE's operating profit goes down a little bit, BSE's goes up a little bit, how does the country gain?
How does the country gain? And finally, Dvashish, I want to ask you about the bigger question which you also address in your piece. Normally, policymakers and regulators would argue, which is a boilerplate argument, that all these systems are put in place broadly in order to enable efficient markets so that people can raise capital to drive productivity in the economy. Now, my sense from whatever you've just said is that 99% of the trades which are purely in the speculative realm, options and futures, how do they add to productivity in the country? I mean, in what sense? I can understand cash segment, IPO money being raised, adding to productivity. I can understand genuine mutual fund SIPs adding to the nation's savings pool productivity. But how do these speculative 99% of the transactions, how do they add to nation's social or economic production? Please explain to me. It beats me,
Zero. It's negative. It's net negative.
So basically, you're saying a whole bunch of millions of people are going to the casino every day, putting some speculative trades or weekly kind of settlement, and they come out, most of them losing money. That's it.
And everybody else gains. Jane Street will gain, NSE will gain, SEBI will gain, and government will gain. Everybody else, the big guys will gain, and the small guys will lose. I mean, as I said, this is net negative. Forget about productive.
A curious question. In macroeconomic terms, what does this do to, say, the bottom 90% of the lower middle class or lower middle class, which are induced via greed, as you said, to enter this to make quick money? What happens to them? What happens to their savings? Are they losing out big time? I mean, are they?
Yeah, of course. In fact, there have been reports that people have borrowed money and to trade and lost, and so not only they have lost their own money, now they have to repay. Okay. It's quite sick. It's quite sick what's going on.
Yeah. So finally, last question, Debashis. After this Jane Street episode, where SEBI has come down hard on them, called them manipulators, impounded their 4,800 crore. Do you expect any change? What is your sense? Or are we to be cynical about this also?
I don't expect any change. I mean, there will be minor tinkering. For instance, something glaring which I don't know why nobody hasn't done so far, which is to monitor market-wide speculation that's going on through limits, etc. intraday. It's real time. This information is available real time, and they can do it because they're monitoring the Indian brokers. So Indian brokers, if they go beyond a certain level, or if I go beyond a certain level, they clamp down on them, saying that you've exceeded your limit today or whatever. They can do that.
Yeah.
there is no intraday market limit. So
Okay.
if they do that immediately, then people like Jane Street will not be able to build up, 300 times position of the cash market in the futures market or the options market. They will not be able to do it. So these are low hanging things which has to be done immediately. There's no question
Okay.
about that. And maybe some of these things will happen and should happen. But
Okay.
um, the basic architecture is not likely to change because it involves a lot of fundamental thinking. What is
Okay.
stock market for? What do investors want? What do foreign investors want? What do big institution investors want? What do we want out of a stock market? How does it fit into the overall macroeconomic tools that we have? All of these things, you require a very, very fundamental sort of a reassessment. That is
Yeah.
not going to happen because nobody is going to take the ownership of that kind of thing. It just what is going on with minor tinkering will continue.
Yeah. So finally, essentially, what Debashis you're saying is that if the government, regulator, SEBI, the main, whatever conductor of stock market transactions, NSE, if these entities do not introspect and honestly try to change the system will not change. That's a tragic aspect of whatever we have discussed today. And that is a conclusion, inescapable conclusion that comes from what you're saying. Thank you very much, Debashish,
Pleasure.
for explaining this complex issue to our audiences. Thanks a lot.